Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. As we navigate the complex landscape of the market, it's essential to stay up to date on the latest trends and insights from industry experts. Today, we're looking at the Indian real estate sector, which is at an intriguing inflection point. With debt levels largely low, analysts are suggesting that the market may be near a peak. Aman Chauhan from Abacus Asset recently shared his thoughts on the sector, highlighting that markets focus more on sales velocity than earnings when evaluating real estate companies. Chauhan also touched on corporate earnings for the second quarter, pointing out that banking performed well, while the chemical sector was a surprise, with some companies posting strong margins and growth. The auto results were in line with expectations, with no major surprises. However, Chauhan noted that his portfolio avoids direct auto exposure due to valuation concerns and Indian companies' preparedness for the EV transition. Meanwhile, CA Rudramurthy BV from Vachana Investments is advocating for a defensive approach in trading, suggesting that investors should focus on sectors like real estate, chemicals, and auto. He recommends pan-India players in the real estate sector as they are better insulated if some pockets soften. It's clear that there are varying opinions on the market, and it's crucial to consider multiple perspectives before making any investment decisions. As we continue to explore the world of stocks and finance, we'll be bringing you more expert insights and analysis to help you navigate the risks and opportunities in the market. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our exploration of the latest developments in the tech industry, and today we're focusing on two stories that highlight the complexities and challenges faced by companies like Nvidia and Plug Power. First, let's take a look at Nvidia, which has been making waves with its AI-powered chips. The company has been a darling of the stock market, with its valuation reaching unprecedented heights. However, some investors are starting to get nervous about the company's ability to sustain its growth. With tech companies spending big on AI without much revenue to show for it, Nvidia's quarterly earnings report is being closely watched. On one hand, Nvidia's aggressive product roadmap, with a new chip release every year, is great news for investors. It means more revenue and a continued leadership position in the AI space. On the other hand, this rapid pace of innovation poses a problem for big tech companies that are its customers. They'll have to constantly upgrade their AI infrastructure, which could lead to significant depreciation costs. This concern has been raised by none other than famed short seller Michael Burry, who is betting against Nvidia. He argues that the company's business model relies on its customers buying new chips every few years, which may not be sustainable in the long term. Meanwhile, Plug Power, a hydrogen fuel cell maker, is facing its own set of challenges. The company has announced plans to raise $375 million through convertible debt to pay down higher interest obligations. While this move may help Plug Power reduce its debt burden, it's also raised concerns among investors, with the stock price sliding 16% in mid-afternoon trading. As we can see, both Nvidia and Plug Power are navigating complex landscapes with multiple factors at play. It's essential for investors to carefully consider these dynamics before making any decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at the latest developments in the home improvement industry. Lowe's stock has been making headlines, with a significant surge after the company's CEO, Marvin Ellison, expressed optimism about the future of home renovations. According to Ellison, Americans are likely to renovate their homes instead of moving, due to still high mortgage rates. This trend is expected to drive demand for home improvement projects, and Lowe's is well positioned to capitalize on this opportunity. Ellison pointed out that many homeowners have significant equity in their properties, with an average of $400,000 per home, which could be tapped into through home equity lines of credit to finance larger projects. With the average age of homes in the U.S. now around 44 years old, There's a growing need for modernization and upgrades. Lowe's has already seen double-digit growth in its home installation business, including kitchens, bathrooms, and HVAC systems. While Home Depot's recent earnings report painted a bleak picture of the industry, with same-store sales rising only 0.1% in the U.S., Lowe's is confident that it can continue to gain traction and narrow the margin gap with its competitor. Bank of America analyst Robert Ohms agrees, noting that Lowe's profitability is likely to improve as it gains share in the professional contractor market. As we consider the implications of these developments for investors, it's essential to remain cautious and balanced in our assessment. While Lowe's stock may be poised for growth, the home improvement industry is subject to various risks and uncertainties, including changes in consumer behavior, economic conditions, and competition. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.